Welcome back to It's Only Money here on the radio. I'm Ryan, and I'm here with Scott Brown and Tammy of Edgewater Family Wealth. Edgewater Family Wealth is your wealth management solution. Go there, and you can get links to their blogs, financial talks, and the most important thing, getting into contact with Edgewater Family Wealth as well. But it is another beautiful weekend. How are we doing, fellas?
Doing great.
Wonderful, wonderful. Summer's here.
Summer is here, even though it's been cold all week.
Yeah, it's been weirdly windy and kind of enjoyable.
It is, yeah.
It's a trick.
It is. It's the calm before the hot storm.
It's a total trick. The swampy, yucky, gross, sweaty, disgusting amount of adjectives.
Yeah.
Summer is coming.
Yeah, that's when I will not be going outside unless I absolutely have to go get money for my small business that I have on Saturdays. Other than that, it's going to be AC all the time. I've been reading books, Scott.
Books? You've been reading books?
Okay, I've been having books dictated to me in audio form.
Talk to me.
Well, because last week you were talking about The Millionaire Next Door, and I was like, Scott always talks about this book.
Yeah.
I'm going to read this book.
You're really reading it?
I'm really reading it.
That's fantastic.
By me reading it, meaning while I'm doing chores, I am playing it in audio form.
Right. So you got the headphones on, or it's just playing in the room?
Headphones on.
Headphones on. So it's so you're absorbing it.
I am.
Yeah. The only problem with audiobooks, and I listen to audiobooks too when I'm traveling, is you can't, like, I'm a highlighter. Like, if you get a book from me, you're going to see what I've highlighted, and I like to go back, a year later and see what I highlight. Like, my Millionaire Next Door copy is completely dog-eared and covered in highlighter. So that's the only downside. But, in an audiobook, you can, I just discovered, because I'm listening to one right now, you can audio clip. They have a function on Audible where you can say, capture this clip, which you can then, like, I send my kids clips of books that I find interesting, and they promptly ignore me, of course, but I send it to them anyway. And I capture clips that I think are important to life or whatever lesson I'm trying to teach them and they're trying to ignore. I send to them in that form. So that is a cool feature if you're an Audible listener.
I was surprised to learn that book was published in 1996 because it's very relevant still.
For sure.
You could still pretty much apply all of that in 2023, and it seems to go well. But my favorite thing about books like this, and I found this when my brother let me borrow a copy of Rich Dad Poor Dad once, is there's people like you're a smart guy. I believe you. You're like a good book. But if you when I was first Googling the book, and it was like you get a lot of why this is wrong or things like that. And it's just like, I don't
It's
know.
the internet.
It's I see now as I've been listening to this, I'm like, oh, this is Scott's same plan of you just invest and you wait and you don't spend your money on silly things.
Yeah, it sounds too simple, and the people that are the naysayers that are the ones that don't. It's like saying, if you work out a lot, if you get up every morning, you work out, you do push-ups, your sit-ups, and you eat right, then you look good. Come on, that's not really a thing. Do you want to do this other thing? You want to drink this juice, and
I want the pill.
You take a pill, or you make this protein shake, and then you look awesome. Yeah, because it's easier to be a cynic, right? I find cynicism quite often, not always, but quite often, to be just a ploy. It's just a way it's an avoidance behavior.
Mm-hmm.
If you say, well, I don't like rich people, or I don't like wealth, or money's overrated, or whatever, I don't need to look that great. Who am I trying to? Come on, really? You're not. You're the only person you're fooling is yourself. We know you want to be in shape. We know you want to feel good and look good and not have economic. Maybe you don't want to be a billionaire. I get that, but you do. You do want to solve your money problems. But when you say things like that, you're just kidding yourself. Nobody believes you when you say these things. So I think it's, again, I find cynicism to be a tool of avoidance. Again, it'd be like saying, who wants to be George Clooney? Women bothering you all the time. Yeah. You got fame. You got your own tequila brand. You ride a cool motor. Who wants that?
Yeah.
Sour grapes.
Seems like a lot of work.
Yeah, that guy's life is probably terrible.
But yeah, it's like it does seem to hold up. I found it refreshing to read because I was like, oh, I sort of do these things already. Yeah, because it talks about not getting into the financial traps of keeping up with the Joneses, because that'll actually keep you in debt. And the most interesting thing I read out of it, and it was just like luxury items are tied to inflation and interest rates and things like that.
Sure.
And it's if you're spending all your income on that, you don't have any money to invest. So technically the person next to you, that millionaire next door, is richer than you are, even though you are flashier for that moment.
Yeah, the term is big hat, no cattle,
Yeah.
right? It's a Texas term, right, for the guy who drives around in the Cadillac with the big hat, but he really is going back to his apartment. He doesn't have a ranch, right? So it's the idea of living below your means, which is so over, that's so simple. I get it. Well, then do it, right?
Yeah.
Because, the average millionaire, I think still the most driven vehicle in the most recent studies by the average millionaire is a Ford F-150. Previous to that, I think it was like a Toyota Camry. So these people that live next to you, and you can tell them because they live in probably the house they bought when they were young. Typically they stay married to the same person for all of their lives. That's not exclusively, but mostly. And they buy a house. Maybe it's a 1,500, 1,800, 2,000, 2,300 square foot house. They like the house, but it's always the best kept house on the street, right? They put time into their lawn. They make sure their home's presentable. Their home is neat and it's clean, and it has maybe modern conveniences inside. But from the outside, it's just a nice version of everybody else's house in the neighborhood. Typically, these millionaires next door, and everybody probably knows one, or probably is next to one and doesn't even realize it, is these people tend to make about 4 to 5 times as much money as their neighbors, right? So if the neighbor sees the millionaire next door and says, wow, their house looks good and they've got a nice car, even though it's not an extravagant car, I need to keep up with that. The problem with that is they're not making near the money the millionaire next door does. In often cases, the millionaire next door has a rental property they don't see, or has a stock portfolio with $1 million in it, or has a business that generates a recurring revenue. They don't see these things, and they don't know in their 9-to-5 job how to keep up with that, so they just spend to keep up with that. So I think that context is always important. There's been a zillion studies done by people who would rather live in a worse neighborhood, or live in a neighborhood where people they make more money than the people next to them, than another place where they make more money but less than the people next to them, if that makes sense, right? It's really about how does it look? It's more about status, actually. People in this country, on average, not everybody, they're more concerned with status than they are with actual wealth, and that's where they get into trouble, right? You see people who live in impoverished neighborhoods driving nice vehicles. You see people who live in impoverished neighborhoods who have really expensive clothing and watches and habits, but no real wealth, right? That's a status play. And it's not exclusive to any neighborhood. It's not exclusive to any ethnicity or race or anything else. It's just people. People do these things. So if you're making a decision and in your head you're doing it because you want someone else to think something about you, that's a status play. People who accumulate real wealth, whether they make a lot of money or not, are largely unconcerned with status. I'm not going to say we're all a little concerned with it, but on average, those people are far less concerned with status than they are with real accumulation of wealth.
It seems like an exhausting, I see somebody wear fancy stuff and I'm like, oh, that's nice. But it just would seem exhausting to keep up with that all the time. And I know I'm a little bit different mentally in that regard, but I know that will help me, especially since talking to you and now reading these books. It's like, oh, okay, yeah, because I can deal with I don't need the newest car. Why would I? Because I do this move every time, like a cranky old man. Like, Zach, you drive the car off the lot, you lose 20%. Yep. Why would you do that when I can just buy the one that somebody else drove off the lot?
Yep.
And all that stuff makes sense to me. But I can see how, in society where it's easy to get caught up with the flashy bells and whistles. I forget the name of the handbag now, but I saw this whole YouTube video on how luxury items keep you poor.
Yep.
And the crux of the video is based on this bag. It's not a Birkin bag. Maybe that. I think that is the name of it, Birkin. And you have to get onto a list to be able to even buy the bag in the first place. And then you have to show that you have bought other stuff first.
Yeah.
And the list is 2 years long. And then you get the bag, and the bag is weirdly $800,000.
Whoa.
Yeah, and you're that makes zero sense to me. But there's a version of person that sees that and wants it, even though they're not able to afford the $800,000 bag. They're just oh, I want that status symbol. But depreciating asset for the most part. I mean,
it's ludicrous. But that's a marketing thing, right? That's scarcity is marketing, right? Bernie Madoff made a career of it, right? You can't really get in here. All right, I'll let you in. it's just a marketing ploy, and it's going to be the polo thing first, or a Rolex or whatever it is, and people, again, these are just status items. They are. My favorite thing that I see in the mall, if you ever go to Millennial Mall, which I try to avoid like the plague, but the few times I have to go there, there's a lot of international tourists, and there seems to always be those guys with the giant polo logo.
Yeah.
Have you seen these shirts? Like, it takes up half the shirt.
Yes.
It's like, hey, everyone, I'm wearing a polo Ralph Lauren shirt. Please notice,
Yeah.
It's like not the little guy. It's not the little jockey.
No,
it's the giant. It takes up your whole body polo guy.
It's literally the size of a jockey.
They may have just pinned an actual jockey to their shirt.
That is what the super rich do, actually. They just pin an actual human jockey to themselves and they walk around with it.
But again, it's status over substance, right? You're making a status play when you buy these things. And again, we're all guilty of it. And the other thing I would say, before we take off, is that some people like cars. So it's not to say if you have a nice car, you're that person. Maybe you actually like cars. But for the most part, people are buying status things.
All right. Well, we'll talk more about that. And we're going to come back with the numbers with Tammy when we come back with more It's Only Money. Welcome back to It's Only Money here on the radio or podcast or internet, wherever you're listening to. I'm here with financial advisors from Edgewater Family Wealth, Scott Brown and Tammy. And if you'd like to get a hold of them and use their services, edgewaterfamilywealth.com is the website you want to go to. And we've been having a fun morning so far, but it is the second segment, and the second segment belongs to one person and one person only, and that's Tammy with those numbers.
I was wondering who that person is. Right. So last week we had some beginning of the earnings season coming out. We had we talked about it. We talked about Microsoft, Google, and some of those numbers that came out. Mm-hmm. Apple is yet to announce their earnings, but
I bet they have some though.
I'm willing to guess.
Yeah, right. Like, what did we do from last week to now? But oil companies' profits seem to be decreasing because of the decrease of oil itself.
Yeah, crude's down.
Yeah,
right?
the crude has been down, and that's a whole giant box to discuss about why and how.
Yeah.
But it plays into this fact because last year, same quarter, we had ginormous earnings.
Ginormous.
Yes, if that is a word.
It is now. So, ginormous corporate earnings.
Yeah, those are earning per share.
Yeah. Yep.
Available to common shareholders, especially for Marathon and Shell. We saw 4 times the earnings Q1 last year versus this year. And that wasn't the norm.
Yeah.
And we also saw some significant performance for these companies at the same time.
Yeah, it was an uptick in travel. There was an uptick in commerce overall. The economy got clearly overheated, which is why we're dealing with the Fed moves that we're dealing with. So I won't steal your thunder, but go ahead.
No, did you
He's
see
like,
that?
don't say it. I want to say it.
We share thoughts in Edgewater.
Yes, that's
fine.
right.
We have a common brain in
hive
the office.
mind, yeah.
Yeah, hive mind. Speaking of that, they got another 25 basis points in the books now.
Yeah, what do you think? You think they're going to pause for a minute?
Well, the tone they used it yesterday seemed like they got there. We can't be certain, but they seem to be saying, well, this is going to be it for a while unless anything changes.
It's going to be it unless it's not.
Yes.
Yes.
Yeah.
Yeah, I mean, it's an interesting game to do. There's a whole Fed speak game that people play. Like, what did he really mean there? It's like when my wife says something to me and says it's fine. What did she really mean by that?
It's definitely not.
Definitely not fine. So if Pal
First
says,
thing is the opposite.
Yeah, if Pal says everything's fine, I'm going to get real nervous. But it means I have to sleep on the couch. But it's understanding and interpreting what they say and what they mean are not easy things. I think that they're seeing that the unemployment numbers are starting to creep back up. Yeah. I think that they're seeing that energy prices are dropping and consumption is dropping across the board there. Inventories seem to be picking up. I know Tesla's having an inventory problem they're trying to deal with. I think it's buy one, get one free Teslas now, if I'm not mistaken.
No. Buy one, get one wheel free.
Yes. Yeah. Buy one, get a rocket ride free. Not on the last one, though. You don't want to ride on that one. That would be a bad idea. But, so I mean, where do you think it's all going?
So their tone seems to be less hawkish than it was. Although 2 weeks ago we had, as we said, one of the Fed speakers. He said that he's surprised the economy did not produce negative GDP, and it did produce positive, but it's half what it should have been.
What's half of what it should be?
Half of what the expectation was. So they were expecting
the GDP's half or the decline's half?
The GDP itself
is half
of what they expected.
So that's why you think they're pausing? Or,
yes.
Yes, okay. So that worked better than they expected.
They initially thought it's going to be negative, but then they didn't see any, they didn't see any decrease in demand. They didn't see any decrease in sales. They said, well, that means the GDP is going to be about 2, but then came out 1.
Yeah.
And they said, oh, wait, hold on now. What's going on?
Easy.
We don't want to push too hard.
Yeah. So if you go out about town, go to a restaurant, go to a store, people are still doing their thing. The consumer you can't quiet the American consumer. They're going to go out and buy stuff.
We love it. It's our second favorite thing to do.
We buy stuff. We like our stuff in the United States.
Yep.
So, it's going to be interesting to see. I mean, the recession callers, so, there's some people that call for a recession every week. There's going to be a recession.
Eventually,
and then 6 months later,
Eventually they'll be right, though.
There's going to be a recession. And a year later, there's going to be a recession. Eventually, yes, you are going to be correct if you keep calling for one over the course of a few years. So what do you think the long-term, that should be a stabilizer for the bond market? I noticed the stock market didn't seem that happy about it this morning.
It did not, because now what your treasury yield now is paying 5.3. So it is hard to beat that.
Yeah, because if you can get a guaranteed 5.3, you got to think, I got to earn 8 or 9 in the stock market to take that risk, right? I'm guessing what people might think, but for me, I know the standard spread between the Treasury and what the S&P has brought historically is around 2.5% to 3% a year. So if you say, well, if a Treasury is paying 5, I better earn 8 or 9 to make the trouble, the gyrations, and the frustration of up and down stock market worth it, right? Because otherwise, I'll just get 5 and go to bed, right? I'll go play golf.
Pretty much, yeah.
Yeah. So the risk-free rate of return matters. It matters for people's stock appetites, what they're willing to pay for earnings in a company like Microsoft or Apple or whatever it is. I had a conversation with a client literally yesterday, and we were talking about buying stocks. And people usually, when they have a stock they want to buy, they don't really have a solid methodology for doing that other than a gut feeling. Hey, I read about this thing, I heard about this thing, they got a new technology, a new drug, a new whatever, but they don't bother to look at the company's fundamentals, right? And I'm not saying technicals or fundamentals or anything works better than anything else, but they don't do what I'm about to explain. So I gave the guy an example. I said, if you were to buy an ice cream shop and you were to go downtown or to College Park or whatever where I live, and you say, hey, there's an ice cream shop here I want to buy. It's a business, right? No different than the stock or the company whose stock you want to buy on the NYSE, right? They're both businesses. The ice cream shop makes $500,000 a year. The ice cream shop owner says, hey, I want to sell you my business. There's only one share, you can buy the share. And you go, okay, cool, $500,000 a year in revenue. Maybe I'll pay you 3 times revenue, right? Because you say, well, take me 3 years to make my money back, but after that, I'll do fine. That's a reasonable price in my little pretend world here to pay 3 times the trailing revenue of that company, right? But nobody does that with stocks, right? They just go, I like that company. I had a Coke yesterday, I'll buy Coke. Or I drive a Ford, I'll buy Ford, right?
Yes.
They don't look to see what you're describing, which is earnings per share, right? They don't look to see what the revenue is per share, right? You can look at that and you can say, well, if Ford's trading at 17 times earnings, and I don't know if it is or it isn't, am I willing to pay 7 times earnings to buy this company or a piece of this company? You wouldn't do that if you were buying an ice cream shop. You wouldn't just go, I like ice cream, I'll buy an ice cream shop. I hope.
The chocolate one is good.
Some people might.
17 times asking? Yeah.
Yeah,
That's
so
tough.
you wouldn't do that, right? You would go, well, what are the earnings? What am I getting for my share of this company, right? So I'm clearly simplifying to make a point. But I think it's worth, if you want to buy stocks and you want to own long-term equities in companies that you think are going to be around 20 or 30 years from now, which is how I think you should do it, then you should look at some of these things. Even if you look at them, it doesn't mean the stock's going to do well, or if they meet your criteria, it doesn't mean the stock's going to do well. Because let's look at Tesla. Tesla's a stock where the earnings per share are 9 zillion. right? Or something. In
Yeah,
that
fundamentally,
Fundamentally, it makes no sense to buy that company's stock, right? But it's also you're buying the dream, you're buying Musk, you're buying the idea, you're buying the revolution, if you will, or the green-olution, if you will. Green-volution. I'm making up a word here. Green-volution, right? So, again, there isn't one way to buy a stock, but the one way most people don't do it is to look and see what they're getting for what they're paying, right? In terms of sales and revenue and cash flow and things like that. So, again, I don't expect everybody to become a fundamental analyst, but by golly, buying a stock should not simply be, I use this or I had this yesterday, and or if you're in Atlanta, you buy Coke, or if you're in Seattle, you buy Starbucks, or if you're in Orlando, you buy Disney. No, people, these are things. They're okay ways to think, but they're not the ultimate way to think.
What Scott described here is the value investing methodology.
Yeah. You want to know what is the value of it? Because if you went out and bought a shirt or you went out and bought a pair of shoes, you'd say, well, what's the value, right? I really like this, so I'll pay $50, or I really, really like this, so I'll pay $75. You want to know what you're getting. Is it worth it? I saw this same pair of shoes down the street for $50, so I'm not going to pay $60 at this place, right? You have to compare and contrast and look at the numbers. And if you're with a good financial advisor, segue there.
I wonder who.
Hopefully, whether it's us or somebody else, they're doing these things for you.
Absolutely. And if you would like to have somebody else do it for you, because money is hard. You think you know how it works. You think you just give money and you get Coke, and then that's what money does. Money does so much more. It does so many things, including eventually working for you and then just giving you money when you're old. How do you think your grandpa had that money to buy you that new toy all the time? Turns out he invested correctly, and you can do so too by going to EdgewaterFamilyWealth.com. We'll be back with more It's Only Money here, wherever you're listening. Welcome back to It's Only Money. I'm Ryan, and I'm here with Scott Brown and Tammy of Edgewater Family Wealth. EdgewaterFamilyWealth.com is the website you want to go to, of course. And during that last segment, you were talking about the Treasury yielding like 5.3%.
Mm-hmm.
And you said that's enough because in the stock market, you'd have to go, you'd be like, well, now I got to make at least 8% in the stock market or whatever. And then that got me because I'm like, oh, should I just move all of my money into this super secure 5.3%, which seems like an insane number right now. And that's what, but then, I'm also, just for my job and everything, I have to listen to all the news channels.
Of course.
A lot of times people yell at me on the radio, you only listen to this one station. No, I don't. Listen to all of them. And the thing is, it seems like everything's about to fall apart at all times.
Absolutely. Well, the world is going to end at any given moment if you listen to the news, which has been going on my entire lifetime. I remember my grandfather grumbling back in the 70s about the end of the world and Nixon and Ford and Watergate and Carter and then Reagan. And then my parents were mad at so-and-so and Bush was no good and Clinton was no, it's politics. Politics, like we talked about before, was status. Politics are a status game. Politicians aren't doing anything. They're literally not doing anything. And we're all okay with it because they now sell fear. So if you're afraid, you'll vote, right? If you're not afraid, I feel like in the 80s and 90s, everybody was kind of chill. Mm-hmm. The Cold War had ended at the end of the 80s, and everybody in the 90s kind of like, yeah, everything's cool.
Yeah.
And people didn't vote because they're like, everything's good. I'm not upset about anything. It's all good. Pearl Jam's around. I like Nirvana. We're going through the 90s. Everything's cool and a little bit grungy. And people they just weren't bent about a lot of stuff. And then somebody said, you know what? If you want people to vote, you got to upset them. You got to sell the fear, right? And one side selling one kind of fear and the other side selling another kind of fear. So what we have is a bunch of afraid people. There's a certain part of our population that's constantly afraid of this, that, or the other. But, I don't look at it that way. First of all, I'm not playing that game. I refuse to be afraid. If a meteor lands on my head, it lands on my head. If the Russians chuck a nuclear warhead at us, I hope it hits me on the head, to be honest with you. Because until then, I'm
That's
not.
That's best case scenario, to be honest with you.
Yeah, agreed.
Being outside of it, not as good.
No, I don't want the zombie thing. I've seen the show. It doesn't look like fun. So, what I'm here to tell you is, maybe the world will end. Maybe one side's evil and the other side's wonderful, and vice versa. But I'm here to tell you neither of those things is true. One side's telling you the debt's the end of the world, and we're here to save the day, and we're going to reduce the debt. and how we're going to, and the other side's saying, well, but if you don't fund our spending and increase the deficit, then everybody will starve. And then they go back and forth scaring each, different sides of the population. And then what do?
Shut down the government sometimes.
For a second, and then they go on with business as usual, right? They're all McCarthy and Biden and all the people involved in this conversation. They all know at the end of the day they're not going to do it. They're not going to let the debt, default. Thank you. That's the word I'm looking for. They're not going to let the debt default because that's catastrophic. And they won't have their jobs if they do that, right? It'll be chaos. So this silly game we're playing where we're all terrified and are they going to do it? Are they not going to do it? And what's the debt mean? And all. Listen, let me give you some statistics on our country. I don't think our country, this is still the best place in the world to live and do business, in my not so humble opinion, right? I'm not diminishing other places. I've been to Europe many, many times. I've been to South America. I've been a lot of places in the world. Last count, I had like 35 countries I've been to. There's a couple of parts of the world I'm missing that I'm going to catch up on. But across the world, there are many wonderful places and many wonderful people, right? But this is still, to me, from where I've seen, the best place to live, the best standard of living. Let me give you some numbers. So you think this country's falling apart, we're a declining power, whatever. Here's what I got for you. So the U.S. is $25 trillion GDP, is still number one by a mile. China is $25 trillion. We're still about 25% of the world's GDP. China is 18% of the world's GDP. So we're still number one.
Yeah.
We're still number one, baby. In 1990, the U.S. accounted for 40% of the G7 GDP, and that's Germany and Japan, all the major players. And this includes those two countries. Today, that number, now listen to me again, we accounted for 40% of the G7's GDP. Today, that number is 58%. Mm-hmm. That's not a decline. I'm not great with numbers, but that's up. Yes?
57 is higher, yes.
Yeah, what does thank you.
Jamie's the numbers guy.
Jamie is the number. He's verified it, right? So income per person in America was in 1990 24% higher than in Europe. 24% higher. Today, that number is 30%. So our income is on average 30% higher than Europeans, which is better than the 24% better we were in 1990. Doesn't sound like declining to me.
Jamie, can you confirm?
Yeah.
1 minute. Let me
is that number bigger?
Yes,
30 is bigger than 24?
Confirmed, yes.
The ultra rich in this country have done well. That's one of the big complaints you hear, inequality and things like that. And I get it. Inequality is not a healthy thing for any country, and we need to, however we fix that, I don't quite know, and that's part of the political argument where they're going to argue about it and do nothing. But the ultra wealthy have done well. But a trucker in Oklahoma can earn more than a doctor in Portugal on average. That doesn't sound like a country in decline.
Yes.
Britain spent 80% as much as the U.S. In 1990. Today, they spend 69%. British citizens are able to consume 80% less than us in 1990, and the number is only 69% today. So they're moving backwards against us in terms of our ability to consume. So my point in all of this is that you've kind of got to shut out the noise. I try to convince my clients to stop watching the news. It's not working very well. They all still do. But whatever your flavor is, whatever your team is, they're going to tell you to be afraid of the end of America because of the other team. Now, listen, I'm not stupid, mostly, but I understand that there are players in our politics that are not well-intended, and I believe on both sides, right? So you shouldn't be ignorant of what's going on around you, but if you waller in it, if you consume it too much, it freezes you, because people who are afraid don't act rationally, right? That's why when bad stuff happens, people run around screaming.
Yeah, that's why I have so much toilet paper in my closet still.
Exactly. People do not act rationally. So recognize when you're making a decision, when you're calling me about your fears over ESG, or you're worried, you think the guy selling gold on TV is starting to make sense, or you're on your fourth Amazon guy this week bringing you bunker supplies, right? Am I acting out of fear? Because people who act out of fear make bad decisions, and when you act out of fear, you do dumb things. You say, I'm behind on my retirement savings, and that makes me scared. Therefore, I will buy crypto, or I will put all my money in meme stocks, or I will give my cousin Louie, who has a really great idea, all of my life savings, or I will stop investing in my 401k because that takes too long, right? These are fear-based decisions that you're making, and almost exclusively they are bad decisions.
It's funny you say it takes too long with a 401k because I like watching mine because it gets bigger slowly. It has bad days, but it's just like, and I look back and I'm like, oh, it's bigger than it was. But I get it. It's not huge jumps, and people are like designed to feel like if it's not moving in a huge way, then like you're doing something wrong. But time is still going to happen. It's still going to move forward.
Time is the big eraser of faults, right? 401k is not perfect, but it is the best way I know for a normal average person who has a job, quote unquote, to save and become a millionaire. And I'm living proof. I have lots of clients who are in that category, right? Nobody's ever come to me and said, hey man, I just made $3 million in crypto, or I just made $2 million in meme stocks, or I just bought a house and flipped it and now I have $7 million when I had none. Nobody ever does that, right? Never in 36 years. I don't know of anybody. I have never heard of anybody. I know lots of financial advisors. That does not happen. But you know what happens all the time? Several times, multiple times a month, somebody calls up and says, hey, I got $800,000 in my 401k. I need to move somewhere. Hey, I got $1 million I saved in my profit sharing plan and my deferred comp at work. That happens every month, right? So you can see that and say, yeah, but that's for suckers. You mean the sucker who has the $2 million you don't have? Right? That's the hilarity to me is people will point at somebody like that and go, that's foolish. You should do this other thing that never works, right? Short-term solutions make people money. They make the people selling the short-term solutions money. Long-term solutions are painful because we don't like to sacrifice. We're not wired for it. We don't like to watch our 401k go up and down over 30 years, but you know what? It works. Is it perfect? It is not perfect. Does it always go up? It does not always go up. Are you going to have bad days? Of course you're going to have bad days. But I am telling you, this short-term sell, this short-term fix, this idea that you can get rich overnight, yes, occasionally it does happen. Somebody wins the lottery, somebody pulls the lever in Vegas. But those people never maintain their wealth because they spend the rest of their lives recreating that situation. And I find that money that doesn't come from sacrifice, money that doesn't come from discipline, money that doesn't come from process is not money people are going to have very long.
No, I was thinking about this earlier, and I'm glad that like I had a financial catastrophe like right when I turned 18, where like I got sucked into a bad credit deal, and then it wrecked my credit for the next 7 years, and I just had to deal with like, okay, well I can just never borrow money, and to like learn how to like navigate that. It's helped me out now because now when this place has offered me all this money, I'm like, I remember that time before, and I'm not willing to do that again. And I don't really need this money. And I've gotten to the point where I can, like, if I can't afford it, I just won't buy it. That's very helpful. And I know people that like got the trust fund money and they threw their life away basically. And now they work at a Denny's.
Yeah. It's not an uncommon thing to hear the story of the inheritance or the lottery winnings, and it ends catastrophically. A lot of times people end up murdered or suicide or any numerous things that can happen because it messes with somebody's head.
The Lottery Murders is a show, I believe, on some network.
It is a show.
Yeah. Wow. So if you have a bunch of money, watch out and and
check your back
and put that money in the hands of somebody who knows what they're doing. That's a great segue right there. EdgewaterFamilyWealth.com knows what they're doing. They got Tammy. He knows when numbers are bigger than other numbers. And that is important.
Can you imagine that?
In a financial institution. But seriously, though, I believe my mom has a meeting with these guys later. So EdgewaterFamilyWealth.com, and we'll be back with more. It's only money when we return. Did you know, if you're already listening to this show, that you have the right mindset of being a millionaire? I've thought about this a lot because people who seek stuff out like this tend to be successful anyways. So there you go. You're smart. You might have no money right now, but you will one day. And when you have that money, you know where you're going? EdgewaterFamilyWealth.com. And I'm here with Scott Brown and Tammy, and we're just talking money as we always do. And I want to talk to you guys about something, because since getting the house, as you know, it's like I've become an official adult, and I've noticed that. Okay, people are like, okay, you got to get the house next. Okay, all right, I got the house. Now the peer pressure's like, you got to get the baby. Okay, and now it's like, okay, well I bought.
You do know you don't just get a baby.
You just get them. I don't know how it works. I skipped that day in school.
Yeah. Okay.
But it does seem to be. It does feel like I'm in that mode where like I'm being almost like checked by other people. Like, because like my buddy got a boat, and then he's like, when are you going to get a boat? I mean, this boat's awesome. Like, boat. Or whenever anybody gets a new car, they come over and like, you want to look at it? I'm like, no, I don't want to look at your car. Like, it's weird, but I sort of do, I guess.
Yeah, I don't know.
a little bit. Yeah. And it does seem like there's this pressure around me to like, kind of like do the same stuff that everybody else is doing. And that's difficult because I feel like I don't have that money, and I don't know how they have it either a lot of the times.
Yeah, well, I think you've just answered your own question, right? I mean, people, misery loves company, as they say. And people, again, we could talk about politics, we could talk about sports, we could talk about all these things that, really at the end of the day are just status things, right? I'm a fan of this team, and we're awesome, and you're not, unless you want to be a fan of that team with me, right?
Yeah, exactly.
And you want to. I can remember back when I was really into college football, which I got over at some point. I realized that basing my whole happiness on 22 18-year-olds that I don't know was probably not a good idea. But during that time, you would have arguments about whose football team was better, right? Mm. Your team could have just lost 83-0, and you're like, yeah, but we're still the best in the country, and here's 8 reasons why, right? Yeah. You're just trying to confirm something, so that's what people want. Peer pressure is merely make what I'm doing okay, right? I go to this church. Why don't you go to this church? I root for this team. Why don't you? You should root for this team. I like this food. I like this
Apple products are like that.
Yes.
Like I enjoy my Windows PCs and my Android phones, and Apple people will shame you.
They will.
And to the point where
You're embarrassed now.
I bought a tablet just so I could be like, here I have it.
Get off my back.
But now I've spent $800 on a thing that I think is for babies. So great.
Yes, great. Yeah. So when people peer pressure you, again, about anything, it's really about them. It's really about make me feel better about what I'm doing, right? So like, when it comes to money, it's the same thing. Like they're like the crabs in the bucket, right? One tries to crawl out and the other reaches down and pulls them back into the bucket. And it's people just are uncomfortable with other people doing things they wouldn't do. It's like when you stop drinking, or you say, you know what? I've been getting a lot of hangovers. I just ruins my day the next day. I don't think I'm going to take the month off. What happens?
Oh, all of the questions come if you're out with your friends. They're suddenly like, why aren't you drinking? What do you do? Just have a drink. Why not do this?
What's wrong? You don't like us?
Yeah.
What are you not one of us? No, I just don't want the hangover in the morning, but they're not falling for it. So the same is true of money. If you say, Ryan decided tomorrow he's going to go buy some dilapidated house somewhere, he's going to fix it up, he's going to do the toilet, he's going to fix the roof, he's going to mow the lawn, he's going to trim the bushes, do all the work that goes into making a house presentable, then he's going to rent it out. His friends are going to be like, "Wait, Doc, come on, man. Let's just go play golf. Let's go to the beach. What are you doing that for?
You could have a boat.
Yeah, you could have a boat.
Which is a very convincing argument a lot of the time.
Yes, you could have a boat. Works on a lot of people until they have a boat, and then they never want to see another one again. Mm-hmm. But so my point is, they don't like that you're doing something to improve your situation that they know deep down inside they'd like to do but won't do, and that goes on for a lifetime, right? You have those friends. And then, Ryan says, well, I'm going to put money in my 401. Oh, you're going to put money? Really, Ryan? What are you, 80? You going to put money in your 401k? Oh, that should add up quickly. Meanwhile, why don't you just do the crypto bro thing, man? What, do you hate crypto? Are you not with me on the crypto thing? Well, no, really, I just want to do this long term, take my time, be methodical about it. That's no good. And then 5 years later, you buy your second house, you fix it up, you do the work, you fix the toilet, you deal with the leaky faucet when they call, and you do all the crap nobody wants to do. And then, your friend's like, you still doing that? Dude, I'm on to tech stocks, man. I got these penny stocks. I'm paying 80 cents for them. They're all going to be like $100. right? Yeah, I know, I get it. I don't really understand that. I'm just going to keep buying houses, renting them out, and adding to my 401. Your 401, you still doing that? Dude, you got to look at the crypto, man. You got to be on with the crypto. Yeah, I know, but and then 30 years go by, and that clown is on his 18th thing, short-term thing that isn't working out. And now Ryan has 7 houses paying him $10,000 a month in rental income and $1 million in his 401k doing the stupid thing that his friend didn't want him to do because the friend knew he didn't have the intestinal fortitude to do it. And they say that you are the average of the 5 people you spend the most time with. So let me say this to everybody listening. Think about who your friends are, right? Look around you. If they're always drunk, that's probably not a good sign. If they have no money because they're careless with money, that is not a good sign. I'm not saying you have to get rid of everybody. We all got that one friend that's fun and never does anything responsible, but they're fun to talk. They're fun to talk about.
Fun at a party.
Did you see what he did? Right? So
he got a boat,
and he owns crypto, and he's on his 8th wife. So don't be careful who you hang around and the things you're absorbing in your day to day. And be careful of people who want to suck you into their stupid thing that they're doing that day. Because, again, they're insecure about what they did, which is why they're telling you about it and why they want you to participate in it.
The biggest one for me right now is we're planning a wedding, and everybody has an opinion. That's what I've learned about that. And I think it's the same thing like with crypto. They're just trying to justify their $50,000 that they spent to hang out with their friends.
Yep.
And for me, I'm like, let's find the way, because I think the worst thing you could do in a relationship is bring yourself into debt right out the gate for a party.
Yeah.
But the financial peer pressure on that one from friends and family, and family financial peer pressure is a big one.
Yeah. How could you have that cake? That cake, that's a $100 cake, $500.
Do you not love her?
You need the gold-plated cake, 17 layers with a person popping out of it and fireworks attached to it. That's $18,000. There's people spend 15 grand on a cake.
Yes.
Do they not know where the Duncan Hines is on the Publix aisle? I mean, come on.
Yeah. And that's the one that I don't get, and I thought I could go into this thinking like, of course I'll just shut it down, like whatever they say I'll shut it down.
Yeah,
but then it creeps in more and more, and everybody and it's literally everything, and it is hard to do that. And I do understand like the 401k. When I first heard about it, I was like, that sounds like the most boring thing in the world. Like I'm just going to incrementally, slowly make money over time. Okay, Susie Ormond, no thank you. and I remember like actively looking in college. I'm like, what are the other things? I was like, well, they got this Roth IRA, which is like the 401k's cool stepbrother.
Yep.
That you're supposed to get if you're young.
Yeah, no, it's a thing, man. People want to fix what ain't broke, and they see that it worked for this person, they see that it worked for that person, but for them, they're going to do it better in a shorter amount of time. And it just never works that way. And the problem with shortcuts is they eventually make that person bitter, right? Because they've tried their 10th shortcut, it didn't work, and then what do they say? The system is fixed. The system is against me. Well, most sensible people that you've talked to have told you not to do every one of these things that you've done. But the system, quote unquote, is against you. No, you're against you, right? And there are grown people who I meet every day who are still convinced that, they need to buy gold, or this is the year for gold. It's going to go from 2,000 to 10,000 tomorrow, or crypto, or meme stocks, or, they read about something in the newspaper, and yada, 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 on and on and on and on and on. I told you the story about the Iraqi dinars. I had a client once call me. Yes, Iraqi currency sounds like a great idea.
Yeah.
Very shiny.
I knew somebody that was into the currency exchange thing, and has some sort of name, and
Forex.
It's like one of those, and they would talk about like, I'm buying like this and this, and it evens out, and then eventually they lost all their money, and I think they were actually raided by the government at some point. So, if I was you, I would find it really frustrating because there's always the next get rich quick scheme that's being advertised, and they're hot, they're sexy, right?
Yeah, they are.
And every time I would talk to somebody, I would just have like a scroll if I was you, and I could pull it out and be like, these are all the people that I have made money and work with me, and they're all doing just fine. So here's your proof right here. What you have is nothing. You have a wish, a hope, and a prayer, and it would, because you guys know how to get it done.
Well, it's like, I guess, I was thinking about like the term Hail Mary is used when somebody's given up and just throwing all caution to the wind to try something. I mean, think about if you had a football team and every play was a Hail Mary. Like, all right, you guys all go deep. You big guys block.
Yeah.
Right? And you were on your own 20 and you're chucking it into the end zone. First of all, your quarterback can't even throw it that far. Yeah. Right? And every play's a Hail Mary. So the whole defense is standing on the goal line waiting for this play. That's what the equivalent of these get-rich-quick things are. Let's just throw Hail Mary after Hail Mary after Hail Mary.
And that's one of the things that Edgewater Family Wealth can do for you, because they have a level of objectivity that you don't have. They're going to give you unbiased advice and help you make rational decisions for your financial future, because let's be real, we're humans. We make all kinds of irrational decisions. So go with Edgewater Family Wealth. The website, edgewaterfamilywealth.com, to get a hold of Scott and Tammy. And we will see you all next time on It's Only Money. Scott, Tammy,
Have a great one.
Have a good weekend.
All right. This has been It's Only Money on your radio.